Welcome back, dear traders. This week, investors have already found out a revised two-digit CPI for the Eurozone, a lower CPI for the UK, and the Bank of Japan's policy decision which defied expectations. And today, the United States is also to release several high-impact reports. Let's get to know the analysis and forecast from InstaForex experts. Wall Street had a tepid session on Tuesday. Investors were discouraged by corporate reports of the top American banks, and the stock indexes gained support from Tesla news. The major stock indexes closed mixed yesterday, and the Dow Jones had the least lucky day. It lost 400 points intraday or 1.14%. The Nasdaq was the only index to close with a minor growth of 0.14%. The S&P 500 looked a 0.2% downtick to close at 3,990 points. The benchmark indexes traded quietly and cautiously higher in the New York pre-market, and the S&P is expected to trade in the intraday corridor between 3,980 and 4,060 points. Wall Street indexes closed in the red on Tuesday as investors digested the red-hot financial records of the top American banks. Goldman Sachs was to blame for the negative sentiment because it reported a 69% fall in revenue in the fourth quarter. This affected the Dow Jones. Goldman's shares dropped by 6.44%, the steepest intraday fall since last year. Morgan Stanley reported higher than expected profits on the back of a solid wealth management revenue. The bank's shares jumped by 5.91% yesterday. Both banks underscored a dismal macroeconomic situation and a lower number of deals. Goldman Sachs was not the only reason for the slump in the Dow Jones. Insurance company Travelers' costs sank by 4.60% after the revenue forecast for the first quarter was lower than expected. At the same time, Tesla's stock spiked by 7.43%, thus helping the Nasdaq to retain some optimism. Tesla shares went sharply up on the back of a significant increase in the e-car sales in China in January. This certainly supported the high-tech sector, and Tesla shares showed the strongest gains among the companies of the S&P. The stocks of the Chinese companies traded in the US went down after China's GDP report. China's economic output shrank in 2022 to the lowest rate in almost half a century. To date, corporate reports could spoil market sentiment. Microsoft is planning massive sell-offs. Sky News reported that Microsoft will fire almost 5% of its employees, or roughly 11,000 jobs. Previously, Amazon and Meta also announced layoffs due to the lower demand and the grim outlook for the global economy. A new wave of layoffs in Microsoft proves malaise in the macroeconomic environment. Microsoft shares traded flat in the pre-market. Apple shares rose 0.3% before the opening bell. Tomorrow, investors will get to know corporate reports by Netflix, Costco, and Procter & Gamble. Today, the market has to assess a series of macroeconomic data, use factor inflation and retail sales have been already released. Producer prices for final demand slipped by 0.5% in December from a month ago, sharper than the consensus of a 0.1% downtick. It's the strongest decline since April 2020, which prices easing inflationary pressure. US retail sales fell by 1.1% in December on months, also steeper than the consensus of a 0.8% drop. Later today, investors will absorb the Fed's Beige book and comments by Fed's policymakers. The US dollar index is trading with a sharp price swings today, and the yen's fall enabled its recovery, but later the US dollar index again lost its footing amid growing optimism in the European Union and the United Kingdom. The index dipped below 102 points, trading within the intraday corridor between 101.30 and 102.20. The US dollar is losing favor with investors. The fundamentals which used to reinforce the US dollar now contribute to its weakness. Analysts spotted the green shoots of recovery in the global economy, so the greenback is losing its dominance. The Fed cycle of aggressive monetary tightening used to enable the stunning rally of the US dollar, and this cycle seems to be coming to an end because of the signs of a steady inflation deceleration. The market bets on a couple of modest rate hikes and the ultimate level of the funds rate slightly below 5% by the middle of the year. Then a decrease in interest rates will follow in the second half of the year. And this week, Morgan Stanley's portfolio managers said they bet against the US dollar and downgraded the forecast for the index by 6%. All in all, a decline in the US dollar might set the stage for the soft landing at the end of 2023. Everything depends on macroeconomic data, hence traders will clear up sentiment on the US dollar later today. And the retail sales data and factory inflation didn't strengthen the US dollar. The Beige book will be on tap tonight, accompanied by the comments from Raphael Bostic, Esther George, Patrick Harker, and James Bullard. The Canadian dollar gained ground intraday and fed by rising oil prices and the looming rate hiked by the Bank of Canada. The USD cut pair fell 0.13% to 1.3372. The intraday corridor for the currency pair is seen between 1.3320 and 1.3420. Today, the report showed that inflation in Canada is stronger than expected in December. It makes the scenario of another rate hike this month more realistic. Canada's CPI slowed down to 6.3% from 6.8%. Still, the annual CPI for December is 3 times as high as the official target rate at 2%. Most analysts reckon that the Bank of Canada will raise the overnight target rate by 25 basis points on January 25. The market foresees a 77% chance of a rate hike by half a percentage point at the nearest policy meeting. Interest rates will peak at about 4.5% in the second half of the year. The loonie finds support from a rapid rally over oil prices. Brent crude futures surged by 1.4% to trade at $87.13 a barrel. WTI climbed 1.6%. Oil prices went up in response to the forecast of a growing global energy demand by the International Energy Agency. The report says that China will post almost half of the global demand, even despite some uncertainty. The crypto market is trading cautiously higher. Bitcoin got stuck at about 21,200 in a range pattern. After release of the US economic data, the token headed higher to conquer 21,500, and the popular altcoins also reversed up in a sync with the Bitcoin. While cryptocurrencies are trying to settle at the highs of January, the FTX crypto exchange spoils market sentiment. The crypto firm confirmed a significant deficit remaining on its platforms. FTX shifts responsibility for some deficit to hackers. The firm says the token worth $323 million was stolen from the international crypto platform. The crypto market seems to be immune to such news. The market survived the shocking 2022 year. Hence, investors aim to open a new year with a rally, and the intraday corridor for Bitcoin is defined between $21,200 and $21,700. Keep close tabs on the market developments on the InstaForex TV channel. Financial markets are going to be volatile today because of a flood of economic data and the comments by Fed policymakers. See you online tomorrow.